Welcome to the Crypto Prism channel. Let's first take a look at Bitcoin on the 1 hour time frame. Right now, this pullback from Bitcoin has landed precisely around the 0.382 retracement level, and we're seeing some buying support coming in. This move is not a trend reversal. It's a technical retracement after a leg of upside. After the previous high spiked to the 94,700 area, the price entered a correction phase. At the moment, we are still within a bullish structure. From the Fibonacci perspective, the 0.236 level has already been broken. 0.382 is where the market is currently fighting, and 0.5 and 0.618 belong to the next defense zone. And what you're seeing now is that after pulling back to 0.382, the downside momentum has clearly weakened, which means this is not panic selling, it's the bulls actively digesting profit taking. On the 1 hour time frame, there are two key decision levels. The first one is whether 0.382 can hold. If 0.382 holds, the market will likely enter a consolidation phase or form a secondary bounce structure. After that, it is very likely to retest 0.236 as well as the previous highs. But if 0.382 breaks effectively and the 1 hour candle closes below it, the structure will shift into a deeper retracement. At that point, the focus moves to the bull defense zone at 0.5 and 0.618. So right now, this market is not about gambling on direction. It's about waiting for confirmation. If it doesn't break, don't chase shorts. If it doesn't stabilize, don't blindly chase longs. Just wait for the market to give its signal. Your job is simply to execute. When the structure forms, key levels hold, and volume confirms, that's your reason to take action. When signals are unclear, the level is wrong, or emotions are driving you, it's better to stay flat than to force a trade. Trading is not about predicting the market. It's about following the market. You are not here to prove you're right. You are here to take the money you're supposed to make. So remember, the market is always right, and all we need to do is respect the structure and execute. Next, let's take a look at the 4 hour chart. You will notice that the nature of this move is actually very clear. On the chart, the previous rebound touched the resistance area near the previous high, but failed to break out effectively, and then pulled back noticeably. So that area is still the midterm bearish defense zone. The current movement looks more like a consolidation after the rebound is finished, rather than the start of a new trend. And the current price is hovering around the 0.236 level near 91,400, repeatedly moving back and forth without strong volume. Neither bulls nor bears are taking full control. This shows that the area is a typical decision zone, not a trending move up or down, but a phase digesting previous emotions and positions. At 0.236, bulls feel like the market has already dropped a lot and should bounce. Bears feel that the previous high failed to break, so maybe it should still be shorted. The result is both sides want to act, but neither has a clear advantage. That's why you're seeing fake breakouts, fake breakdowns, and constant stop-loss hunting. From the current structure, on the larger time frame, we are still in a recovery phase after a downtrend. On the midterm perspective, the rebound failed to break the key resistance zone, so it's still a weak consolidation. This phase above 0.236 is not trend movement. It's a waiting area. You don't gamble direction here. You wait for direction confirmation. So going forward, if 0.236 breaks effectively and the 4 hour candle closes below it, it means the rebound lacks strength and the market will return to the downside structure. The target would likely move toward a deeper retracement zone. That's the trend following scenario. The second scenario is that 0.236 holds and the price breaks upward out of the consolidation range. Only after breaking out and reclaiming the upper boundary of the range will there be a chance to test higher Fibonacci retracement levels. But it must hold. A simple wick is not enough. Now let's switch to the daily time frame. Bitcoin is currently stuck around 90,203, right at the intersection of two key support levels. Right now, price is dipped slightly below 0.236, but hasn't fully left the support zone. The next moves come down to two main scenarios. If price can hold on the ascending trend line plus the 0.236 support area without breaking the trend line, then short-term we will likely see a rebound. The first step would be retesting the 0.236 Fibonacci level to confirm whether it can flip from short-term resistance back into support. If it holds, the next target would be the 0.382 retracement level. But keep an eye on the descending trend line above. Every rebound toward that line has been pushed down before. Don't chase longs blindly at that level. Wait for a confirmed breakout. If price breaks the ascending trend line below and also fails to reclaim 0.236, the short-term structure will turn weak. The first target is the previous low near 80,578. That's a key support zone. If even that can't hold, the correction could deepen further, so risk management must be prepared in advance. Alright, that's all for today's video. We'll see you tomorrow.